Hello and welcome back to Coinscrum Markets. I'm thrilled to be joined today by Asen Kostadinov, Head of Strategy at Copper. Welcome, Asen.
Hi, Paul. Pleasure to be here.
And also Chirs Aruliah, Chief Product Officer at BCB Group. Hi, Chris. Good to see you.
Hey, Paul. Good to see you.
Thanks for joining us. We're here to talk about how crypto market infrastructure is maturing for institutional access. Obviously, it's been a hot topic the last couple of years, and both of your companies, I guess, have been at the forefront of enabling that process, recognizing what some of the problems would be some time ago and building for it. Asen, can you just, for our audience, just tell us a little bit about what Copper does?
Yeah, absolutely. So we are the leading provider for custodial and settlement infrastructure in the digital asset space. Our secure custody is used by hundreds of institutions to manage their assets. We also pioneered the first of its kind clearing and settlement network that allows market participants to trade on exchange, but then settle their trades within the Copper infrastructure. And this significantly improves the market structure, giving investors peace of mind that their funds are always safe and stored securely in their custody accounts, while dramatically at the same time improving the capital efficiency because they can turn capital much quicker.
Mm-hmm. Okay. And Chris, likewise, can you just tell us about BCB Group?
Yeah, BCB Group is a financial services group for the crypto market. We're Europe's leading provider of business accounts and payment services for those in the crypto space. We also provide trading services for the wider digital economy. We're regulated in the UK and Switzerland, and today we serve hundreds of customers in the space, some of the big names that we all know, with banking and payment services and trading services.
Yeah, thank you both. So as we've seen, up until more recently, the whole evolution of the crypto trading and market infrastructure ecosystem was very retail focused. The well-known and large retail exchanges typically followed the same siloed model where they were kind of offering full service to their customers, acting as custodian, acting as exchange, acting as broker in many ways. Companies such as yours recognize that when institutions came into this market, that type of infrastructure probably wouldn't meet their needs, certainly wouldn't tick all the boxes for their compliance departments. And Asen, as you mentioned, things like capital efficiency with this very fragmented market would become a real problem without any established clearing systems. And Chris, as we all know, anyone touching these markets for the last few years, things like payments and banking have been a real challenge. So, Asen, firstly, I think there has been a big move, obviously we've seen in the last 2 years in particular. From your early days of onboarding customers and where we are now, what are some of the biggest changes you've seen over that time and, from the type of product that you're building has enabled?
Yeah, great question. I think we can split them in sort of two brackets. The first one is the nature of the institutions that are getting involved in the space. Right. First, probably back in 2018, beginning of 2019, when some of the institutions started, dabbling into crypto. These were primarily sort of crypto native funds, crypto native trading firms, even because most of them were trading with proprietary capital, testing the waters. Some of them were admittedly started by people from the traditional space with backgrounds in FX and commodities, because these tend to be quite close to digital assets in terms of how they trade and sort of behave. And as we sort of saw the adoption and the build out of the ecosystem and infrastructure, we then started to see more sort of fund entities appear. With family offices and other, even big foundations, university endowments, actually starting to deploy in the space. Probably the first ones were, of course, the VC funds, and that started probably in 2015-16. But then more and more hedge funds started to appear, deploying sophisticated strategies. We then saw in 2020, of course, the sort of emergence of corporates using assets like Bitcoin as sort of store of value. And then, more mainstream asset managers. We heard a few sort of the big macro legends in 2020 embracing the asset class. We've seen some of the sort of big asset managers come into the space. And the latest sort of trend and the most aggressive one so far has been since the probably beginning of 2021, Q1, the big service providers, the tier one banks, have started to take a real interest in the space. And of course, that's been prompted by the previous group, their biggest clients, coming to them and saying, we see some opportunities in this space. There is alpha that is currently not present in traditional space. Our clients, want us to offer crypto products. So what can you offer us? And of course, a lot of the banks were really behind on their crypto agenda. And there is no real way for them to catch up unless they partner with specialist providers in the space, such as, Copper, to actually help the speed to market.
Yeah.
Now, of course, together with the change of counterparties and institutions, we've seen the products getting a lot more sophisticated, right? In 2018, you could probably be hard pressed to find an institutional custodian out there. Then the first sort of offerings were really bare bones cold custody. Some of them were put in literally in bunkers with physical security. That has of course evolved to allow for more integration between custody and trading, to allow for broader market access, direct incorporation of liquidity providers, such as market makers, into some of the custodial sort of networks, and just creating this more fluid and more integrated ecosystem. And the latest thing is, of course, trying to improve further the market structure by taking away, that storing of assets on exchanges and allowing sort of institutional counterparties to face a bit more specialized providers in the space when it comes, for example, to custody. So I'll stop here. There is, of course, a lot more that I can share, but I'll let Chris share his views.
Yeah, no, absolutely. And I'm sure, Chris, you've seen sort of, in terms of especially around customer profiles, I'm sure you've seen those changes happen in a very similar way as well. I guess with you focused on something, slightly different touch point from what Copper are doing, but equally important about how, we are finally making a distinction between these market functions, which is what typically regulated actors and participants expect to see. What are with your approach around payments and regulation in particular, regulation has been quite loose, which has been frustrating for many firms. It does seem to be, we'll come on to this maybe a bit later in the conversation, certain amount of clarity seems to be coming into play. Whether that's a good thing or not remains to be seen. But can you tell us about how you've kind of have managed to focus on regulation and what that's opened up and what comfort that has brought to participants that might not have been able to engage before?
Yeah, thanks a lot, Paul. And I'd say, in the original question, Asen summed that up very well. I think if I can just step back before answering that question, the one thing I'd add to that is the emergence of DeFi, which I know we're going to go on and talk about, but that's obviously a huge area that I think certainly we're involved in as well. But just going back to your question now, regulation, absolutely. So one of the things with BCB, regulation is very much at the heart of BCB. If we look inside BCB, we've got a mix of folks who've come from, traditional finance side, folks who've been involved in legal, folks who've been involved on the crypto side. And so, the unique part of us is that we know how to engage with regulators, and we have been engaging with regulators in all the jurisdictions we operate in for quite a few years now, obviously in the UK with the FCA. And when we think about solutions within BCB, nothing happens or works, certainly from a product perspective. And when we think about whole product and what we're bringing to market, nothing comes together without an eye towards the regulator, and also understanding what is there today and what in the conversations we're having with those regulators can we work on together. So examples of that would be, we're currently working on a stablecoin project. And when we looked at the different regulatory jurisdictions for that, we decided to work with a regulator in a particular jurisdiction that was open to the kind of approach that we want to take. And I think this is quite interesting, Paul, with regulators around the world. They all take different positions. Whilst they center around core themes, obviously, if we look around the world, what BaFin is doing is different to what the FCA is doing, is different to what the regulator in France is doing. So I think actually one of the challenges that we face as an industry is how do we work to this fragmented regulatory landscape? And can we as market participants try and bring some harmony to that by engaging, in those regulatory conversations? And hopefully at some point in the future, there will be that harmony. But certainly what we're seeing today is a number of different regulatory views that we as players have to conform to. And within BCB, we look to operate, within the markets that we're working in with the regulator and ensuring the products and services we have fit within that.
Yeah, and I think what we've seen around that is also the emergence of various trade associations, which are, definitely doing a great job in sort of bringing together everyone with the industry to try and speak as a single voice and hopefully get that single message across to the different regulatory jurisdictions and maybe get some kind of cohesion there. But I imagine it's quite a frustrating journey, but it does seem like we're heading in the right direction. Now, I think one of the things when anyone that comes to work in this industry, first and foremost, has been excited about the potential of the underlying technology. Yeah. At the same time, it seems the industry is correctly positioning itself to at least get to a starting point where it does look like traditional markets in many senses. But the risk is that we miss the opportunity to innovate at the same time. And both of you, both as companies, are innovating using DLT or blockchain technology itself to hopefully maximize some of its full benefits. Can you tell us, Asen, start with you, how you are, looking at the technology and, again, going back to regulators, how likely it is that we're going to be able to innovate at the same time, not just end up recreating what we have in traditional markets, which is not what really we want to see.
Great question. So we obviously at Copper, for us, this is the only technology we use, right? We don't have anything sort of running on traditional rails, apart from some of the fiat stuff, the normal sort of connectivity to some of the traditional system. But a lot of everything else, when it comes to our product and business, runs on sort of blockchain rails. And there have been a lot of, how can I say, a lot of appreciation about the opportunities that DLT can yield into traditional markets, be it finance or actually a lot of other industries as well. One of the key difficulty, though, is, it's almost like changing your base level infrastructure for any company, changing your ERP system to move to a DLT model. This is a gigantic undertaking for something that is not, it's difficult to prove, what are the benefits. Of course, you can theorize all day you want, but if you're gonna go through this level of disruption in your enterprise, then you need to be very sure about what are going to be the benefits. And secondly, of course, you can't just change the infrastructure, the technology. You need to completely rethink your processes, which of course are not just you in isolation. You need to operate with various participants and counterparties in your industry. So that, I think, is the core of why DLT hasn't taken off much quicker than people anticipated. The reality is that the technology is sound. It is getting sort of tested. There are numerous projects happening all over the place, but it's just a fundamental change which will take years to sort of establish itself. Now, the way things actually are happening in finance, is very healthy. So what you're seeing is this sort of crypto space, so to say, which in my opinion is nothing different than financial services. And I think on a 5 to 10 year horizon, we're not going to be speaking about crypto and financial services. We're going to be just speaking about financial services because these two fields are rapidly converging. But this crypto space is sort of giving you a glimpse of what financial services might look like if you base them on sort of this DLT infrastructure. Things like transaction monitoring on a completely different level compared to what we're seeing in traditional finance. Settlement and clearing happening real time or nearly real time. But now what you're seeing is actually money being transacted and an industry operating on that infrastructure, so that you can clearly see the robustness of the infrastructure, the processes that need to be developed, the regulatory framework, the frameworks that need to be imposed. So what we are seeing here is the sort of testing of this infrastructure. And 5 to 10 years down the line, we'll see kind of maybe not a wholesale migration, but bit by bit, the traditional sort of financial services migrate to this sort of digitally native infrastructure, is how I would call it, something that is fit for purpose in the digital world that we live in. So, but that of course can't happen in one go, and it cannot happen without it sort of having some sort of a smooth transition from traditional to the new infrastructure. Maybe 2017 was the year when people were still thinking and dreaming that we'll create a parallel financial system in isolation, when in reality, you probably need to take a step back from kind of that state of, let's call it financial services 2.0, create financial services 1.5, which actually employs a lot of the legal frameworks, the regulatory frameworks, and the safeguards that exist in the traditional financial system, but reimagined to work in this sort of new paradigm to then unleash the innovation going forward. And I think, you know, it will be Chris mentioned DeFi, you know, keeping the innovation within DeFi will be absolutely crucial to actually then going forward and creating a world that's not exactly the same as a traditional financial system. But I think this sort of a step back, if you will, or a bridge that we're creating at the moment to the traditional financial system is absolutely key for us to see broader adoption going forward and to unleash the next step of innovation.
Yeah. Well, Chris, it's something that you guys at BCB have kind of had firmly on your roadmap as well. One of your products called Blink, the Blink network, is a DLT-based payment system. So I guess this is a good example of taking some advantage of the technology that's available. As Asen said, maybe just doing it, focusing on one key area that's going to benefit. So can you tell us a bit about the process that brought that to market, how that was accepted and by regulators, and what their comments and feedback was on that?
Yeah, absolutely, Paul. Yeah, so the journey to Blink is an interesting one. I mean, where BCB started is early days, we were trading crypto for clients, essentially a broker. And the challenge at the time was moving money in this ecosystem, as we all know. And we had to solve it for ourselves. As we solved it for ourselves, we said, well, this would work for the rest of the community. And that's how Blink was born. And obviously it's gone on since then. And we're now, the real-time payments and settlement network for the industry in Europe. And as the market's grown, so has the usage of Blink. Certainly today, the customers are coming on to Blink. Some of the largest players in the market are telling us this is absolutely essential to their business. The ability, as we all know, to be able to move funds in real time, any time of the day and night, 365, hugely important for market participants, particularly if you're trading on the spot exchanges, as an example. But improving that part of the ecosystem has been step one. And, we want to go beyond Blink in terms of what it can do and the reach of Blink. Into being more of a global system as well. In terms of infrastructure, like Asen, we're basing our technologies on blockchain, and even within that, looking at what are the different blockchain technologies we need to support going forward as newer ones emerge. Looking at that, does it give us faster throughput? Is there better security levels? And we're constantly evolving and looking at our labs. And at the moment with Blink in the labs, we've got multiple versions on different blockchains running to see which of those is going to give us the best route in the future as well. I think the interesting thing with regulators is they look at us and see the innovation that's coming out of BCB, and they are very intrigued by that. We haven't had a regulator saying no so far. And, I think the thing here is that part of the job we have as players in the market is to educate regulators and help them understand this technology and help them understand that it is fit for today and it can be used in a way that improves the situation for all players in the market and hopefully eventually go beyond the crypto ecosystem.
Yeah, good point. And maybe going back, as Asen said, maybe we're creating finance version 1.5 for now. And it strikes me that something like the Blink network would be useful to certain financial institutions, even if they're not looking to trade or get exposure to the crypto markets now. Is there seeing some signs of that and recognition that these are potentially better payments rails for them to use for other use cases?
There are some there, Paul. To be honest, for us at the moment, we're very much focused on the crypto ecosystem right now. We know that banks, we've had conversations with banks. We know that there's potential interest there, but there are still many hurdles for them to sort of get through before we get to that stage. For now, there's more than enough to serve within the crypto ecosystem. So that's kind of where the development focus is right now. We do see in the future that, as Asen said, tier one players are coming into the space. They are looking at crypto in a different way this year. And so they could be emerging in some time in the future. But right now, what keeps us busy is making sure that network is ready for our customers, is making sure it's ready for some of the new things that are coming along. So, elements of DeFi that we want to plug into the Blink network that our customers can take advantage of, particularly around yield, etc. And so, that remains the focus for us right now. Yeah.
Well, let's touch on that because obviously DeFi has been such a hot topic over the last year. I think we all agree some amazing innovation going on there. We'd all, but perhaps if you tried it on a personal basis, it's still very raw. But again, the leading players in that part of the market are innovating themselves at speed, and the subjects or topics around things like being compliant. A few years ago within crypto, you'd have kind of had a explosion of Twitter storms going on about saying that this is a market or technology that shouldn't be regulated anyway. But I think we're heading to a world where it can be optional, and if DeFi platforms are building modules which allow compliant trading, then that would be an option, and the market would decide kind of what they want to use. What are you each seeing, Asen, maybe start with you, what are you seeing in terms of customer demand? Is this kind of just a curious interest at the moment? Chris mentioned obviously yield generation, which is a big feature within DeFi and even fiat lending and stablecoin lending. Given low interest rate environment that we're in, that's surely attracting attention of some kind of larger institutions.
Yeah, absolutely. I mean, we are getting a lot of interest with regards to DeFi and connectivity to DeFi. Probably the sort of more crypto native institutions, including funds, are the more active on that front, understandably, of course, because they understand the space better, and they can also navigate some of the compliance aspects in a better way. Some of the more traditional folks are still sort of looking to establish the operation with the more established sort of digital assets such as Bitcoin and Ethereum. But definitely everybody's curious to learn about the DeFi, to test different strategies within the DeFi space, and to get actually that connectivity. The biggest challenge, though, for any sort of institution will be the regulatory aspect, right? The regulators are still having difficulty understanding the space, and probably understanding how the space can fit in the traditional regulatory frameworks that they're applying. Because, knowing your counterparty, right, is one of the key things in how the markets are regulated. Clearly, if you're sort of investing or transacting with a DEX, that is very difficult. You have a pool of assets, and it's very difficult to understand what assets are coming from where. So creating a way to give regulators peace of mind and for them to actually understand and find a new way of regulating this will be key to sort of solving this issue and actually improving the adoption among institutions. We've seen already from the likes of Asen, Compound, the emergence of these institutional lending pools that are just for KYC counterparties, etc. But there is still a lot of details to be ironed out around how are the KYC rules applied, who can KYC, who can't, and these are with the regulators, it's always the details that are troublesome. But definitely people are eager. Equally, with regards to yield and creating additional sort of yield for customers, something that new banks are looking a lot at. But with the latest developments with BlockFi, obviously that is another area that needs to be sort of looked at through a regulatory prism, so to say.
Yeah, so that's the recent news where obviously BlockFi offering yield generating products, and certain states in the US have asked them to desist from onboarding new customers while they review what they're doing. So again, maybe the industry moves fast, and that's typically when regulators engage and normally hopefully come up with a solution. And they generally we've seen companies allowed to proceed once they've kind of answered any of the regulators' concerns. Are you equally seeing any direct demand at the moment, Chris, or got immediate plans around yield generating products and services on your platform?
Yeah, so we've certainly got plans. We've certainly seen demand. On the DeFi side, with echo Asen's comments that seeing that more from the crypto native side naturally. I don't think the regulated firms are there yet, and nor is the DeFi market mature enough, I think, for those players to engage. But there's certainly, enough demand from the crypto native side. And what we're seeing in that space is, some really tremendous innovation. Through working with these firms, you get a real insight into that innovation. What's interesting is that you've got mathematics and computers driving, returns on assets now versus, a firm. And, that does lead into the, yes, there's the regulatory view of, KYC, et cetera, with DEXs, et cetera. But there's an interesting question around counterparty risk. When you look at, the risk on the DeFi side versus the CeFi side, the counterparty risk is with a firm. On the DeFi side, it's with, an issue of a system going down or being hacked, etc. So you've got equal risk, on both sides. And I think what would be interesting to see, is how the DeFi side emerges over the next 12 to 18 months, because certainly it's moving at pace. Certainly there's a demand there. We're seeing that demand. We're certainly building for that demand. I think as well, in terms of when we talk about the wider ecosystem, what we're doing within our space is a massively game-changing, from a world perspective, in how we store money, how we move money, and then, how we get a return from that money. And, all these models are being built now in every area. And the most exciting part we feel at the moment is on that DeFi side, and what can we pull out of that DeFi side that has real-world application right now.
Yeah. Okay.
Just to add on the risk side, because that's really important. The DeFi space is still largely experimentary, right? So, and the risks, I would argue, are really not that well understood. There are at least 3 or 4 different brackets around operational risks stemming from how different blockchains operate. Of course, the smart contract vulnerabilities. There are governance risks within the protocols, of course. And scalability challenges. And when an institution, or for that matter, a retail user interacts with the system, they need to be very, very aware of the different risks so that they can appropriately allocate capital. And I think there is still a way to go for the ecosystem to actually get there. And this doesn't need to come from the regulators, right? It could just be part of better user experience to create these views that allow people to better assess the risk. And I think once you get the mix right between financial services experience and the sort of technology and security experience, that's when you're going to see that shift towards more sort of risk management awareness as well in the space.
Yeah, well, I think
Sorry, Paul, if I can just pick up on that point, Asen. And that's very much where we see BCB playing a part, actually. You make a very good point there in terms of these protocols and in terms of these systems. You know, one of the parts we're looking to play here is curating those for our customers. You know, taking a good hard look and, you know, talking to those folks on in those areas and studying them very closely in our labs, working with them in our labs, getting a good feel before we bring anything to market. And so that, I think, you know, is certainly an area, Asen, that is hugely important in terms of de-risking for clients, and, you know, an area that we're particularly focused on before we bring any product to market.
Yeah, I think it's slightly ironic that, you know, we've got to this point in this industry, from a trading perspective at least, where, you know, especially in the early days, and primarily, you know, retail customers, they did pretty much understand and know that there are risks, and there wasn't anyone behind the scenes that was going to bail them out. And unfortunately, there has been compromises and people have lost money, but I think people also, you know, correctly realize that they need to distribute their risk as well. And if there's going to be some losses, that hopefully limit them that way. And maybe there's an argument that, you know, we've seen such overarching regulation to protect consumers and companies, and, you know, generally there's kind of bailouts available if something goes wrong, that, you know, risk mitigation's gone a little bit too far, and it's kind of, you know, an opportunity for people to better understand their risk and mitigate against themselves. And we'll see, you know, we're seeing the emergence of insurance products, specifically around DeFi. So these, again, are examples of the pieces that are gradually falling into place, but might not be quite there yet. Just on this, again, around this DeFi and a bit about the regulation, obviously, you know, in Europe, we've got the MiCA, Markets in Crypto Assets Regulatory Framework proposal out. You know, it seemed to be quite overarching and threatening developers of DeFi software, for example, which might be concerning for some. In the UK, there's been challenges with the FCA and their AML licensing and authorization process. And then just recently, at the end of last week, we saw in the US some of the proposals there, which again seem to be a little bit overarching, and I think that's already triggered some kind of industry response. There's going to be a need that we just don't have regulators come in, just try and reapply everything that exists in the within existing markets to this world and kill all of this innovation. I know we touched on that earlier about, you know, whether that should be concerning and for companies such as yours. But what are companies doing to work together? Again, I mean, you know, something like the travel rules being a hot topic, and this probably touches on a lot of the regulatory concerns about KYC and identifying, you know, participants within the market. Are you seeing progress on that, where companies realize, again, something like that's a mutual benefit to the industry and needs to be worked on in collaboration? Asen, maybe.
Yeah, absolutely. I mean, everybody is realizing that the path forward goes through, you know, more regulation. I think nobody's now kidding that this will be, yeah, the regulators will get more active and will show more interest to the space. And I think the sort of a sign of the maturing ecosystem is that people are starting to actually proactively anticipate some of these moves. They're starting, you know, as Chris said, to form industry bodies, lobbying groups, which the primary sort of goal is to better educate regulators and also the industry. You know, there's some really active groups that are creating code of conducts, and this way sort of increasing the credibility of the ecosystem in the eyes of the regulator. And within a lot of these groups, you know, you have memberships and you have committees where people are definitely bringing their heads together and discussing what are the best ways are to self-regulate the industry before the regulator comes in. Because, you know, the regulators are not necessarily all evil, right? They have an interest in maintaining the integrity of the markets, protecting consumers, et cetera, et cetera. So if you as an industry or as a company can show in a detailed way what your plan is to actually solve for these end goals, then I think there will be a lot more constructive conversation going on. And I think that's in the best interest of everybody.
Sure. And Chris, is there anything that you guys are specifically working on, perhaps around the travel rule or any of these things that you know do need addressing in the near term?
Yeah, I mean, we're obviously implementing support for the travel rule, Paul. We have to, along with all firms. I think sort of also just sort of continuing the regulatory conversation. You make a point about existing regulation or existing regulatory framework being sort of applied to the crypto space. There's almost an argument to say, you know, I hope, you know, or we as an industry certainly hope regulators, you know, take a look at, you know, how this industry is functioning, and perhaps there's even a case to make for a new regulatory framework, you know, being applied, and hopefully regulators will listen to the voice of the industry via the various bodies and firms that they're engaged with. And I guess a bigger question for regulators, I guess, and this is sort of out there, is, you know, how do you regulate a distributed network and a distributed system? That's the biggest challenge for regulators. It's like saying, how do you regulate the internet? And, you know, that's the challenge that's coming down the pipe for the regulators, that, you know, there's going to be no company to regulate on the other side of the equation. And you've got distributed systems that are running internet money. And that's probably the big question and challenge for regulators right now.
Yeah, I mean, again, if you go back to, you know, the US bill published last week, I mean, the notion that Bitcoin miners might need to be compliant with the travel rule just kind of, you know, it seems nonsensical that it's even put forward, really, and not understanding that, well, that just kills the industry stone dead.
Yeah.
And you know, hopefully, I guess, I mean, we've seen examples already that the industry can kind of, you know, come back with their comments and hopefully make the required changes. I guess
it's just a natural reaction to seeing something that is quickly emerging and growing out of proportion that needs to be regulated. And what's the easiest way to regulate it? Well, find something that is already ready that can be applied. Mm-hmm. But I think regulators are quickly realizing that a lot of these things are not fit for purpose.
Yeah.
And there will be a kind of a longer process of probably going back and forth. You know, we'll have a band that will stretch one direction, then will be released into the other. There'll be a lot of volatility. But I am optimistic that at least, you know, the industry will continue the dialogue, will continue the education, and we'll end up probably, you know, 5 years, a decade from now, with a kind of set of rules that are tailor-made for the space, but not shoehorning, you know, an existing regulation into this space.
Yeah, yeah. Well, I guess, you know, I've always said that the problem is that the industry becomes a victim of its own success, and the higher asset prices go, then obviously the more concern you get from regulators and governments, etc. And I guess we're seeing that. And I guess the other thing that the success of, in terms of, you know, market capitalization of all these assets was naturally going to do was kind of wake up some of the traditional financial institutions such as banks and custodians. And that's definitely what we're seeing now. I guess many of the big names have sort of thrown their hat into the ring, either starting out bringing custody services into play for their clients, definitely seeing demand from their clients, as you mentioned earlier, Asen, which is driving them where they might have been, you know, cautious about it before. This, I guess, is a positive thing. And, you know, some certain names rumored to be looking to offer prime brokerage services, which is another interesting area, which is, you know, being developed by a number of people and startups within the industry. But then, you know, question is around balance sheets to kind of open up that market more. So, you know, what's your thoughts on, is this a good thing that these guys are coming into the market now? Is it a risk for startups? Or do you think it's an opportunity for kind of the real innovators to plug in and collaborate with some of those institutions, which can bring another layer of credibility and potential capital, I guess, to support the market growth? Chris, what do you think?
Yeah, I think, Paul, it's probably inevitable, isn't it, that they will come in. The question is when. You know, they've been talking about it for years. This market has been around for, you know, several years, and they've been on the sidelines or negative. Clearly, they're coming in now because of customer demand. You know, many of these institutions, like Asen touched on earlier, they're only coming in now because there's huge customer demand on their side and they need to work out a solution, otherwise they become irrelevant. So it is hugely important for them strategically to find an answer. What that answer is, I don't know how they will come into the market, But one thing we do know that large institutions don't move very quickly. They might make a statement or they might put something out in the press, but it's actually going to be quite some time before they come here. And then we've got some institutions like HSBC, for example, who openly will not participate and have no plans to. So they're somewhere on that spectrum. What does it mean for startups? Well, I think, like all markets, startups, fill a need or meet a requirement that others aren't, and we're able to innovate and we're able to bring things to market at pace. And that's not going to change just because bigger players come in. We'll still have our customers, we'll still be innovating at pace. And, we have some unique elements to us that they don't have. Certainly when it comes to being astute on the crypto side and knowing what parts of technologies and solutions we build on, I'd say we're way further ahead on the curve than banks and other institutions are. That's not to say they won't get there. That's not to say they won't hire teams that can get here, which is why I say over time, probably they will. But in that time, companies like ours will continue to grow, will continue to attract customers. And we also have the chance to build something new with a new vision, with a new outlook on how this financial ecosystem could develop. And I think we see the models of that in the internet world. If we look at the world of media, if we look at the world of commerce, how that's grown over the last 20 years, why couldn't that happen in our industry? And why couldn't the startups of today be the big companies of tomorrow?
Mm-hmm. Mm-hmm. Yeah, I would largely agree. I think, first of all, it's good that some of these entities are getting involved in the space. They are improving the credibility. They're acting as a stamp of approval. This is something that large institutions are getting involved with. Their also involvement and relationships with regulators, authorities will help those parties grasp the space better. So I think, largely speaking, it's a positive move. I would just say that I've been amazed at the speed at which banks are moving these days. I come from Barclays, worked there 6 years, so I've seen the like big bank machine and how slow it can be to approve different things. And at the same time, I'm sitting now at Copper and looking at the engagements we have with various of these sort of tier one banks. And literally they're making moves and sort of readying themselves to go to market within 3 to 6 months. And pushing through approvals that go as high as sort of chief executive officers. So there is definitely high ambition on their part to start servicing the space. They, however, cannot get there alone. There are a number of reasons why they were not able to build the capabilities necessary to service their clients so far. And I'd argue those impediments cannot be easily solved. These are the interaction with their other businesses, the interactions with their internal systems, the risks that they pose from a compliance and regulatory perspective. It's a completely new space for them that, despite being sort of very high growth and high potential, is still minuscule compared to their existing business. Mm-hmm. So there is no management team that would risk anything on the existing business side in order to capture the opportunity within crypto. So I think they'll always play catch up to some extent. They'll always try to go to market with sort of existing best in class providers that are in the space. And this creates the opportunity for the smaller guys, for the startups, to actually build out new businesses in this new paradigm that are native to the paradigm. And that will end up then, 10 years from now, coexisting with some of these big players. As Chris mentioned, that's exactly what happened within the internet era. You do have now traditional retailers coexisting with the Amazons of this world and have been trying for the past decade or two to get their e-commerce strategies up and running, right? So I think this is likely the direction that we are going to be heading. And of course, there is a very important distinctions to be made here because of the regulatory and the sort of systematic importance of the financial services sector. There will be a lot more sort of barriers to be overcome, be it from a government, macro, geopolitical, or regulatory nature. So it's impossible to say from now on where we'll end up, but I think there is, at the moment, I don't see any problem of the existing players coexisting with the startups.
Okay. Well, look, just before we finish up, then, I guess we've seen this big unbundling of the retail exchange, crypto exchange model, which is obviously proving to be a good thing and is enabling institutions to finally access these markets. Do you think there's anything, that we're still missing, or what would be ideal that is brought into these markets, which will offer an additional layer of comfort and open up additional or broader access to the markets? Do you think everything's kind of being worked on or covered, or do you have any ideas of what you think would be good to address, or someone to address, to help strengthen what's been developed so far? Chris, perhaps.
Yeah, I think many of the areas are being tackled, Paul. I think if we look at, if there's one area that is still yet to be sort of worked on, I think it's the whole sort of protection and insurance of assets. That seems to be an area that could, we still need help on. And we yet to see products in the market that really give us the coverage and the protection we need. And that's becoming increasingly important because of, the size of assets that people are holding and the price of those assets. So if I were to pick any area, that would probably be it.
Asen, is there anything that you have on your radar?
Yeah, I think there are a lot of areas that are being touched on, but there is a whole world of sophistication to be developed until we are sort of institutional grade, so to say. And it's across the board, really. Risk management is a key area, which is, I think, severely underdeveloped across the market. Compliance probably has a way to go as well. As Chris mentioned, insurance, definitely. Just the market structure at the moment is suboptimal. Clearloop, our clearing and settlement network, is the only one that allows people to trade, directly with exchanges, but hold assets at the custodian and settle at custodians. This is, I think, vital to be kind of introduced across the market until a counterparty, like a large institution, the BlackRocks of this world, will be kind of able to come in and trade. Otherwise, they'll need to trade via sort of brokers, which again are sort of suboptimal in terms of size at the moment, the crypto native brokers. So it's difficult for BlackRock to be facing these counterparties and relying on sort of their controls, their compliance departments, etc. Maybe we'll get there, but it's much better to resolve some of these issues with the help of technology. And I think that's what we at Copper are trying to do. We're trying to create this safe bridge between traditional finance and crypto and improve adoption.
Okay, well, just to finish up, I won't ask for anything like price predictions. I'm not sure that's relevant, but and if it's not sensitive information from each of your companies, what are you predicting how much the market size can grow over, say, the next 2 or 3 years? Where are we, and where do you think realistically it can get to if all these pieces fall into place?
Yeah, I don't know about the number, but I certainly see us continuing to grow and that number being big. So yeah, certainly don't see any slowdown. I'm quite happy to give you my prediction for the BTC price. It hasn't changed at all for this year. I still see 100K by the end of the year, but let's see.
We'll see. These are all predictions. We won't hold you to it.
Please don't.
This isn't trading advice.
It's not trading advice, and it's not financial advice.
Yeah. I'll just reiterate what I said earlier. I think on a 5 to 10 year horizon, I think we'll not use the distinction of crypto to financial services. So, if I take that to mean that a lot of the assets that we're seeing today in traditional financial services will be trading on some sort of a tokenized sort of form. So if you will, crypto will eat sort of financial services. So that gives you an indication to the size of the opportunity that we're facing.
Everything, basically.
Going for world domination.
Well done. We like it. You've got to think big. Guys, been a really good and fascinating conversation. Thanks for coming on and sharing your insights. Really enjoyed it. And we'll be keeping tabs on how you guys progress.
Thanks very much, Paul.
Thanks for having us.